The market saw a huge reversal today after the Fed unexpectedly just came out and announced this enormous new package. Remember guys, they had their meeting last week where they unveiled another huge package, 100 basis point cut, 700 billion worth of QE. Well guys, they have gone and topped that. So the Fed, the main thing today that markets were getting excited about is the fact that the Fed have effectively released unlimited QE, not limited to 700 billion anymore, unlimited QE. Wow, they have never ever done that before, ever. The markets at the time, they absolutely loved it. So what we saw was the typical dovish reaction upon this announcement. Stocks higher, US bonds higher, gold higher, USD, so the dollar gets hit. Remember guys, when a central bank is unexpectedly dovish, that's usually good for stocks, good for bonds, good for havens, and bad for that country's currency. So in this case, it was the dollar that got hit. So guys, the Fed also announced a few other measures as well that are worth noting. Let me just grab my notes. So there were 3 new lending facilities. The first is called the Primary Market Corporate Credit Facility. This is basically when the Fed is going to lend directly to businesses in general by giving them money for their new bonds and new loans. The Fed is also going to lend directly to the corporate bond market. So they're going to be basically just buying corporate bonds to try and increase liquidity in that market. And they also have brought back this crisis era program. So the last time we had this program was in 2008, 9 and 10. It's called the Term Asset-Backed Securities Loan Facility. And that is designed to support the flow of credit to consumers and businesses. So guys, really, what is going on here? The Fed has thrown everything it possibly has in support of the market. And this is good, this is good. We want to see the Fed acting like this because guys, we're facing a massive crisis here with this the spread of coronavirus. Some analysts are thinking that the US economy could shrink 10% or even more in 1 quarter. So we really do need to see this kind of action, not just from the Fed, but from global central banks. And that is what we've been getting. But more than that, markets, as I was saying, they did like this announcement from the Fed initially, so stock markets went higher, but they have since been coming lower. Why have they been coming lower? Well, it's because all this from the Fed is good, but we need it from the fiscal authorities as well. So guys, Ken made a video earlier about this. US Congress, they still haven't managed to come together to agree a fiscal package. That is the thing that markets really want at the moment. So obviously we're going to be on the lookout for that. Follow us at the Freak Network because we cover these themes in detail every single day, in even more detail for our members. That is pretty much it from me for now, and I will see you in the next one.